risk to reward. All I can advise you, work with 1 to 3, 1 to 5, and then just maybe once or twice a week, go for your home run. Okay? This is all I advise. No 1 to 4s, no 1 to 6s, no 1 to 15s, none of that. Just go for this for now and just see how it goes. I personally will put 1 to 10 on this as a very happy medium and very feasible, but don't expect this every day. Your 1 to 3s and 1 to 5s, cool, but in terms of your home run, just be patient for that to come. You guys don't understand. You're going to get in a trade in the 1 minute time frame. The more trades you take, and before you know it, you're going to be at your entry level with your stop loss, and before you know it, price is going to be down there. Promise you, it'll be 1 to 10, 1 to 12, 1 to 13. You're just not even going to believe it. But if you don't get comfortable with the process and the theory and the patterns and everything else, and get used to your 1 to 3s and 1 to 5s, when this home run starts pushing down like this, you will not hold it. And I'm an experienced trader, and I found it hard. You will not hold it. Okay? Now, for your stop loss, I recommend an average of 3 to 5 pips per trade. 5 pips for those I know are not as experienced and going to be testing this will be using more. I personally now have got mine down to 2.5, and I was doing a lot of 2s today personally, but that has come with experience and it won't work for those on FTMO. But a happy average medium for all of you is 3.5 pips. And you've probably seen it in the 1 minute time frame already. 3.5 pips is perfect. Okay? 3.5 pips.
Is that plus your spread rocks?
No, 3.5 pips. Just in, and when I'm doing this, I'm constantly thinking about those on FTMO. 3.5 pips is sufficient. Up till 5.
Why would you say it wouldn't be sufficient for those on FTMO rocks?
Because the spread is always above price. So no matter what, you're always going to enter half a pip late or get stopped out half a pip early. So you're going to be triggered in half a pip early or stopped out half a pip early. It's just not comfortable. And you understand that a lot of the mentors are FTMO funded and with multiple accounts. And happy medium is 3.5. You just have to trust me on this.
Okay.
So,
Larry says 99% of his trades are 3.5 pips as well. You just have to trust me. We've all used different ones whilst testing this, and I can just assure you, 5 is too big. 3 is good if you get it, but 3.5 is just perfect.
Rocks.
Chantal, if you can come forward again, please.
Hi. How would you suggest to manage the home run?
No, I'm not talking about that today.
Okay.
That's something that will
Next
come.
time.
And maybe you can talk about that topic in another time. But for now, if
I wanted to know if you figured it out while doing the extensive backtesting. That's why.
I have, yes, I have worked it out.
Okay.
But I'm not gonna talk about that now. I just want everyone to get comfortable and settled into this, and I can discuss it with you guys.
Yeah. Okay. So the message is plainly just 1 to 3 and 1 to 5, and just when you're experienced with this strategy, you move on to the home run. You add the home run to
my experience with this strategy has got me to a 2 pip stop loss now, 2 to 2.5 pip stop loss, with a very easy 1 to 5 and a very, very doable 1 to 8, and occasionally 1 to 10s.
Yeah. Same here.
Market only trends on the 1 minute time frame to a certain extent. It will not go past it unless it is super trending, like last week Friday. Do you remember last week Friday?
Exceptional.
Yeah, but that exceptional day does not happen often.
Exactly. Yeah.
Or just as Stubbsy said, you can just shut your laptop. I mean, personally, I can't do it. I just keep coming back to it, but that is also a way to do it as well. But when he says shut your laptop, you also have to understand that his experience also gets him into trades at almost perfect level sort of thing when he gets those home runs. For most of the those in the community, they won't be getting into trades at the best levels, and their stop loss size won't be the best as his is. So that's why I don't want to talk about home runs right now, because unless I start to see the community flourishing with what I've spoken about now, then there's no point talking about home run, because everyone will go for a home run and no one will get the return that they're expecting.
Yeah, understood.
Rox, real quick, did you find that you had to use wider stops during New York versus London?
Yeah, good question. So listen, in London session, your stop loss can be 3.5 pips, but the minute you move over to New York session, it will increase by 1 pip. The range in New York session increases by 1 pip.
Okay, yeah, that's good to know, because I've noticed that it seems like the volatility, the size of the candles are a little bit bigger in New York, since that's all I trade. So,
yeah, New York.
I find it really hard to get in with the 3 pip stop.
Yeah, New York increases the range.
Okay, thanks.
Yeah, no problem.
Rock, do you suggest to stick to just one pair per session?
1,000%. You're trading the 1 minute time frame. I can promise you that you're gonna find everything and more you need on a single time frame.
That's what I thought. Thanks.
I did start trading EU, GU, EJ, UJ all at once, and there are so many opportunities, but it's hard to manage.
Okay, thanks.
ATR, I wouldn't use ATR. It just makes no sense on a 1 minute time frame, because where are you pulling your ATR from? And it just defeats the object of trading with the trend, trusting structure, following momentum. What happens, right? What happens, right, with trading with an ATR is you move from the market creating that downtrend, that pullback, and that continuation trade to then turning into a trade that looks like this. So you don't want to be part of the trend. You want to be part of the momentum when trading the 1 minute time frame. This is an important thing to understand. There are 2 types of trade patterns trading the 1 minute time frame. If your stop loss is too big, you will be part of the trend. Now, I know you like trade with the trend. Yes, I get it. But listen, you'll be sitting this trade for a long time, and you will likely face pullbacks to your key levels, etc., before the market goes down. You want to become a 1 minute scalping trader that identifies the momentum shift, the entry, the stop loss, and the momentum. And once you become this type of trader, you are laughing all the way to the bank. But if you use an ATR and you have a stop loss out here because you want to make sure that you're not going to get knocked out of your trade, you will then just become part of the trend, and you will sit in that trade for a very long period of time. Does this make sense, everybody? And you want to become comfortable trading this yourself and not having to rely on anything. All right?
Can I ask you a question, Rox, just to the risk reward? So let's say, for instance, I'm in a trade on the 15-minute time frame. You may actually be in that same trade, but be in it on the 1 minute time frame. So is it a case where if, let's say on the 15-minute time frame, I had a target of 30 pips, could I then emulate that on the 1 minute time frame where I have a smaller stop loss, but I can target, let's say, at level on the higher time frame?
No, never. I tell you why. Based on what I'm teaching you, the 1 minute time frame is so volatile in how it changes structures all of the time. When you get to some of these key levels and these triples top start forming, and you're holding a buy from down here and targeting 30 pips, you're going to run into this and you're going to lose the whole trade. Promise. I've done the numbers. I've gone through 1 to 3s, 1 to 1s, 1 to 2s, 1 to 5s, 1 to 10s. And I'm telling you, your 1 to 10s are coming on the 1 minute time frame very infrequently. And as like we saw on Friday, if the markets move the way they did, exceptionally. But the exceptional trades are far and few between. I've only seen it happen once whilst trading this over the last 4 weeks. And the fluctuations of trying to capture that 30, 40, 50 pip move would mean that you could be in the right trade in terms of this trend down, but this pullback could be the pullback that stops you out before price continues down. And because of this volatility and the way this moves, it's very hard to go for that 50, 60 pip move. It exists, but you have to be getting in that trade at the right spot. If you're not in the right spot, you're not going to get that trade. And where is the right spot? I don't know. The logical answer, and from what we have identified, is after an uptrend, identifying the high, and then taking the risk. It's not a risk, but taking the investment of entering this trade, locking this trade in at break even, and literally closing your screen and coming back in 4 hours and hoping for the best. But there is a high chance price will go down, come and get you and go down. And it's happened a lot. So it's down to you to try it. I would love to take 50, 60 pips from the market in the 1 minute time frame because I got a tight entry, but it just doesn't necessarily work like that. And using the higher time frames, this has not been built on higher time frames. It's been built on 1 minute only.
And just to be clear here, Rox, just to hear from your mouth, on the 1 minute time frame, we are not taking any partials, all or nothing, really.
All or nothing.
Okay.
Bro,
why do you want to take partials when you're going to have 5, 6, 7 opportunities in your 3 hours to be hitting up profits? If you get a break even, what do you do? If you get a stop loss, what do you do? Move on. If you want to take partials, do it. But I can promise you, if the market's going in your direction and you got in that trade on the right side of the trend and momentum, you will take profit. So if you start taking partials, you're going to build up a fear. So when you next get into a good trade that is moving good, you're going to take those partials off, and then you're going to see market rocking in direction, and you'll never hit that true 1 to 3 or that 1 to 5. And then if you start doing that, it creates bad discipline. And guess what? You'll never make it to a home run. Ever. So it's up to you. You can make money taking partials, but if you want to grow and develop and get exponential results and get the true benefit of trading the 1 minute time frame, it's not advisable. It'll just, you start creating bad habits, and then guess what? You'll never hit a home run. Ever.
bro,
Yes.
just to be sure, the pair you recommend the most is GU,
Yes.
or you like it? Okay.
No, GU and EU.
EU.
EJ creates beautiful trending trades, beautiful double tops, and beautiful perfect break and retest. GU creates the most momentum, and EU also creates momentum. The GU and EU are very nice to trade, but personally, a pound pair with a dollar pair is just God's gift. In terms of EU, it's a beautiful pair to trade, and if GU is not doing so well, then EU will be doing well more often than not. But if you want something that you can work with on a slow, consistent basis, then EJ is the one to go for. And then next to EJ will be UJ. But if you trade them together, understand you're going to be trading.
I'm thinking only trading one pair. I backtest about 1 minute in GU, and I like it a lot.
Okay, yeah.
Thanks,
I personally say GU's enough. Those that want to really try this out and take their time, EJ is perfect for double tops and perfect break and retests. EU is also nice when GU is not good, and UJ is also nice as well, just as a side, just as a optional extra if you don't want to trade EJ. Some people have had bad experiences with EJ.
Okay, man, thanks.
My spreads are different. because I'm not using FTM, I use IC markets. All right, are we done with this risk to reward, guys? Are we moving on? EU has better spreads than GU for sure. Are we moving on? Are we moving on? Everybody understand this? All right, let's go.